how does inflation come in at 4.3%? I have a significant concern, and I'm going to explain why. It creates an illusion that things are getting better. It'll create chaos. It'll create a flood of listings. People will have to sell their homes. That the game's not being played properly. The bond market's been acting kind of weird lately, and this I could guarantee is going to happen in 2027. I'm going to be 4 years older. All right, folks, Stas Canada comes out with some great inflation news this week. The first home savings account is off and running, but the banks aren't ready to deliver it, and the Leafs are getting booed off the ice. It is episode 127 of the Wise Old Owl Show. I'm Vince Gaetano. Thanks for joining me today. I really appreciate you taking the time. We're going to have your questions. We're going to go into the hockey helmet and pick out some questions that came in this week. And we're going to hopefully have a quick show. But first thing, Stas Canada announced that inflation has come down in March to 4.3%, down from February's year-over-year number of 5.2%. That is a significant drop as they try to get down to that 2% target rate that the Bank of Canada is striving for. But when you really drill into these numbers, I have a concern with them. I have a significant concern, and I'm going to explain why. Food and shelter, which are 2 of the 8 components in the CPI basket, represents about 47% of the total weighting. Okay, food is at 15.94% of the basket, and shelter cost is 29.8 for a total of 46.74%, which is almost half. Okay, so they're suggesting that the March inflation rate's at 4.3%, but the mortgage interest cost on a year-over-year basis is up 26.4% versus last month at 23.9%. You also have grocery prices up 9.7%. Okay, so when you have mortgage interest cost up 26.4% in March, because remember, last March is when the Bank of Canada started hiking rates, and we've now got over 425 basis points in Bank of Canada hikes in that year, and we know that grocery prices are up almost 10%. How does inflation come in at 4.3%? Now, listen, no one's going to drill down to these numbers, but what this inflation number does, it creates positive sentiment. It creates an illusion that things are getting better. And I truly believe that there is a lot of cooking of the books to make this number come down, because the big banks need rates to come down to get all those mortgages that are offside right now with extended amortizations and negative amortizations. As we know, CIBC has $52 billion of mortgages where clients aren't even making the interest payment every month because of these static payment products. This is obviously going to be a storyline that's going to bring inflation in line, because they need to. Okay, if all these banks have to start enforcing folks to make the payments that they should be making, it'll create chaos. It'll create a flood of listings. People will have to sell their homes, and all of a sudden a huge tsunami of supply that comes in the market would depress the value of homes, which is bad news for banks, because if prices are depressed and actually come down, it does cause significant problems for them to recover all the debt that they've owed on these things. So they're definitely in protection mode, they're in defensive mode, they're trying to create a narrative that everything's okay. And listen, I'm not trying to suggest for any moment that we want people to lose their homes. It's just that the game's not being played properly, okay? These rates have gone up. People's payments have not gone up in these static payments, so they're living in la-la land. They're still living a lifestyle they can't afford, and they're actually paying interest only or worse on their mortgage payments. Okay, so it's really concerning from my perspective, because these are products that don't help the consumer. When you end up owing more than what you started with, that's not building wealth, that's not creating equity in your home. You're actually going backwards, and that's just counterproductive. So it's really something I'm going to keep an eye on. We're going to continue to watch how inflation unfolds here. Now, the Stas Canada came out with March's numbers, okay? So I'm really interested to see what happens in April, because April 1st, the carbon tax kicked in. Another phase of the carbon tax kicked in. And for those of you that drive around in cars, notice that gasoline went up almost 15 cents on April 1st because of that carbon tax. So what's going to be the storyline come the April numbers? Will inflation come down again? Like it's really interesting to see how this narrative is unfolding here, because it's not making sense. But nonetheless, here we are. But I will move on to the next topic, because I don't want to get into a rant, especially today. Is there any questions? Hold on, folks. A lot of people today. Again, it's beautiful out. Salima Haji 3. Are you still recommending 1-2 year fixed, or when would variables make sense again? I really like the 3-year right now. There are some fixed rates that are below 5 in the marketplace, and if that's something that interests you and gives you some security, we could look at that. But the variables are still in the 6s, not very attractive. And if you could save money fixing, it's probably the best thing. But every situation is different. I really like to see what people's cash flow is at and get a better understanding of how much debt they're carrying relative to income to make a recommendation. So if you do need help with that, please give me a call. I'd be happy to walk you through the different options available. But the other thing that's really interesting, all these banks, you'd think they'd have all this time and eagerness to get on the first home savings account bandwagon, okay? The first home savings account bandwagon, this is the program that the government launched 2 budgets ago, where they're allowing folks to save for a new home, their first home, $8,000 a year to a cap of $40,000. So people could save up to $8,000 a year for 5 years, which is $40,000. They could deduct it from their income and have a tax advantage. Like you can shelter it, right? And it works like an RSP. Very beneficial. Why wouldn't banks be clamoring over each other to get these accounts ready? None of the banks are ready to open this up. It's April 20th, okay? So listen to what these banks have said. So Yahoo Finance Canada reached out to the nation's 6 largest banks. No lender was able to confirm that the new account is going to be available April 1st. Royal Bank says it will begin offering the account this spring. Bank of Montreal says the FHSA will be available around mid-2023. CIBC and Bank of Nova Scotia say they will offer the account in the 2023 tax year. That gives them up until the whole year to do it. And TD says the account will be available later in 2023. National Bank says it's working to make the FHSA available to our clients as quickly as possible after the legislation comes into effect on April 1st. So this doesn't make any sense, right? These are deposit dollars. Everybody wants deposit dollars. Why wouldn't these banks be ready to open up these accounts? It's absolutely mind-blowing to me. Are they busy trying to fix the mortgage problem they all have? Like, I don't know. This is really, really strange. But for those that are looking to save for a home, this is another great tool that when you add it to your RSP home buyer plan, you can withdraw up to $75,000 from these sheltered accounts that have a tax advantage to you. It gives you an opportunity to save money a little bit quicker and gives you that edge that in the next 5 years you could withdraw up to $75,000, $35,000 from your RSP under the home buyer plan that would need to be repaid over a 15-year period commencing 2 years after you advance the funds, and the $40,000 from the first home savings account that would be accumulated over a 5-year period. So we got $75,000, not including any funds you have in your tax-free savings account if you did take advantage of that. So very good programs available to help first-time buyers save some money and be at a tax advantage. Okay, now CRA is going on strike, so anybody, I read a report, Doug Hoyes from Hoyes Michaels, he's a bankruptcy trustee, he pointed out that, you know, if you have a large CRA tax balance, this is Doug quoting it in a Twitter post, if you have a large CRA tax balance owing and you're considering filing for bankruptcy proposal, now's the time to do it, because there won't be anybody at CRA to challenge it, and you may just get judgment and have it forgiven. So crazy times in Canada, but you know, I gotta drill in on what that all means, but crazy time. Anthony Fata 3, don't hold be it to it, but I think Questrade can open up the first home savings account right now. So hey, there you go, Questrade. Here's your opportunity to take advantage of the big banks sleeping at the wheel. You might get some deposits. GTA Real Estate Investor, regular follower here. What's the spread between rates for rentals versus primary residence? It seems like it's wider than 0.1% previously. Yeah, it's upwards of a quarter point nowadays. There's not a very big appetite for rentals right now, especially considering a lot of them are upside down as far as cash flow is concerned. But a quarter point is the norm. There are some lenders that don't charge a significant premium. So if you do need help in that regard, please give me a call. I'd be happy to walk you through some options. Nikki Asemi, what's your take on Apple now having their own bank and backed by Goldman Sachs? I really don't track the US model. I believe at this point it's only available in the US. I don't think it's here. If I'm wrong, please correct me. But I do believe it hasn't passed any Canadian regulatory licensing requirements, so I don't think it's here yet. But you know, I'm sure it will be at some point. But let's go to the used Porsche tracker. As you know, I track how many used Porsches are for sale. I've been doing it since September, and when we started, there were 944 Porsches for sale, 100 kilometers from where I sit at Dufferin and Northus, just south of Yorkdale, okay? And we hit a high of 1134, I believe. We're now down to 1,034 as of this afternoon, okay? And just to give you an idea, the last few weeks, we were at 1066 2 weeks ago. Last week we were at 1044, and this week we're at 1034, 9.5% higher than where we started in September. We're seeing a lot of these things getting sold. The weather's getting better. People want toys. So I don't know if that's going to be a trend where more of these things are going to be selling as the summer gets closer, because we did start at the end of summer. We did start in September. So we'll see if there's a trend where these things go on sale in the winter and then get sold in the summer as people have that, you know, sports car vibe going. But we'll continue to track that, and we'll assess it accordingly. The bond market's been acting kind of weird lately. 2 weeks ago, we're sitting at 289 on the 5-year Canada bond. Last year, it popped just over 20 basis points to 3.109, almost 311. And this afternoon, around 3 o'clock, it was sitting at 359. So it's up 26, 27 basis points in 2 weeks, which means that doesn't bode well as to the summer competitive rate market. You know, we may start seeing these rates settle at these levels. We're hoping that the 5-year dips below that 5% consistently throughout the summer and maybe head down to that 4.5 range. We're seeing 4.5 on the insured stuff, but we'd like to get some of that conventional product down at that level as well. The variables are still in the 6s, not very competitive. High 5s for the insured, not really appealing if you're comparing variables versus fixed right now. Don't really recommend the variable at this time. Now, I did moderate a lender event, a lender panel yesterday. I was at an industry conference. It was a vision conference up in Woodbridge at the Universal Event Center, and I was fortunate and had a pleasure of moderating a panel that consisted of TD Bank, Manulife, and First National. Wonderful time doing that. And I was surprised to hear some of the feedback. I asked them about the stress test. Would we see some changes to that? Do they suspect longer amortizations in the near future, and where was their prediction on rates? So from a stress test perspective, they didn't really seem to think that there was going to be any amendments coming, although I do believe we could potentially see some easing of that 2% over the contract rate to maybe 1.5 to give us some wiggle room, and maybe more so on the renewal side. But they had no positive view on the extended amortizations and trying to follow the U.S. model to 40 years. Someone, I think Manulife, Mario, he's been on the show before, Mario Cluche, kind of indicated that we could possibly see 30 years coming in the pipe for high ratio, but nothing is imminent. But the thing that struck me as a surprise, and it came from the TD Bank person, and I asked her about interest rates. I said, what's your forecast? And she suggested, and I'm still scratching my head dumbfounded with this, she suggested that we could see a 200 basis point drop in the bank rate. And I was like thrown away, and she kind of thought that could happen within a year. And I'm like, fuck, what type of planet am I on? Like, I'm just totally blown away. But, hopefully, if she's right, it'll create another little buying spree, and the market will go nuts again if it does happen. But I was totally blown away. I don't know what to say. I'm still scratching my head almost over 24 hours later. So it was a great time. Heard some interesting insight from a number of folks, and I was happy to be part of it. But not sure, was there a few questions here? There was. Is it better to wait until June to commit to a renewal rate? What is a good 3-year fixed rate at the moment? Okay, well, if you're renewing in June, you should be working on locking in some rates right now, because you could lock 120 days prior. So I'll get right on that right away. And as far as what's a good 3-year fixed rate at the moment, we had a 3-year at about 4, on a conventional basis that is. We had a 3-year at about 483, 479, 483 a couple weeks ago. And client was quite pleased with that. Some of the other lenders were in the 5s. So depending on the size of the mortgage, we could get some good pricing. So if you do need some help with that, please reach out. I'd be happy to look after you. Mean in 8. I'm locked in with a fixed until 2027. I know you're not a crystal ball. I got almost crystal colored hair, but not a crystal ball. Should things calm down by then? Listen, what I do know, and this I could guarantee is going to happen in 2027, I'm going to be 4 years older. You're going to be 4 years older. But as far as what's going to happen, it's anybody's guess. My projection is we probably have a better chance of seeing rates lower than they are today than higher. Okay, I'll say that in 2027, but that's a long ways out. That's 4 years from now. But we will be 4 years older. That I could guarantee you, and that's probably what I will stick with. Another question. Sorry, I locked in with 5-year before rates went up. So listen, that's good. Pay down your mortgage. If you have the benefit of a very low interest rate that's fixed, it is your duty to pound the shit out of that mortgage balance. take advantage of every prepayment, increase your payment, make bi-weekly accelerated mortgage payments, jam up your payment, your periodic payment every payment amount. Take advantage of the privilege of paying it down, because if you could get to a balance that's insignificant by the time you renew, it's not going to matter what rate you are. Remember what I've always been saying for the last 100 plus episodes. If you start your mortgage at 5% and you owe 200 grand, you're going to pay $10,000 in interest a year. If you could hammer that mortgage down to half of what you owe by the time rates double. So if you now owe 100 grand and rates go to 10%, how much interest are you going to be paying? $10,000. The interest cost is going to be exactly the same. So the key here is, when you owe the most and rates are low, hammer the shit out of your mortgage. Pay it down whatever you can, because if you could knock it down to an insignificant level from where you are now, it's not going to matter where rates are. So take advantage of that, okay? Hope that is crystal clear. Okay, what other questions we got here? All right, well, listen, let's go to the hockey helmet. As you know, it's going to be a bumpy ride the next little bit. Put on the helmet, tighten the chin straps. Let's get into some questions here. Nervier87, when will rates go down? Just answered that. Not sure. It's going to be probably a while. We still, as far as the Bank of Canada and the variable rates, I think it's going to be a while before we see those come down. As far as fixed rates are concerned, we might start seeing some settling, some competitive factors kicking in for the spring and summer market as banks want to gain market share. You might see some, discounted rates during that time. But for the most part, I think we're going to be living with fixed rates in the 4s, low 5s for a while. And as far as seeing rates that we saw during COVID, never going to happen again as far as I'm concerned. And I hope I'm wrong, but chances are it's not going to happen unless there's another hell of a pandemic kicking in. And if that happens, we got bigger problems. So let's go on to the next question. A Gosher. How does changing jobs affect mortgage qualification, even if it's a better job? This is a great question, very good question. And something that comes through our office quite a bit, because when we qualify people for mortgages, the lender wants to make sure there's not only consistent employment, but stability, okay? And we always encourage people, don't change jobs, because when you take a new job, there's usually probation, right? There's usually a 90-day probation period. And lenders want to make sure you're past the probationary period. Now, every lender is different. If you have been recruited and there's still a technical probationary period, we can ask for an exception, okay? Usually the job has to be in the same field. Usually the job needs to be a reasonable job switch. Like if you're going from a plumber, okay, you've been a plumber for 10 years and you're now going into sales, it's going to be problematic, okay, because it's a major change. But if you're going from IT of security at one company and you're going to an IT of security manager to another, that's more reasonable. And that's something that we can mitigate and get an exception for you. But what I always encourage people to do is please tell us in advance. Don't tell us a day before closing that you've changed jobs. It creates a hell of a problem, and you just got to be on top of this. So be aware that you don't really want to be changing jobs before you close your mortgage, and if you are, be fully transparent and try to see if your new employer will waive a probationary period, because that's going to be very, very important. We'll take one more. Tight LTD, would you be interested in viewing our lending parameters? I guess this must be a lender trying to pitch me to push their product. Sure, send them through. I don't have an answer for you, but I'll take a look at them. Okay, let's see another question here. How's your garden suite coming along? This is from Princey Mortgages. Okay, the Lansdowne project's coming along really, really well. We've just boarded up the property, so all the drywall's been done. It's being taped as we speak. Within 3 to 4 weeks, we're going to start having the kitchens installed and flooring. Okay, flooring is going to go in first, and the kitchen and the millwork. So what we're going to do is Marco from my office is hounding me to head down there to do some more videos. So I will make sure that we have some updated videos for you to see these Laneway suites. The Laneway suites look unbelievable. Okay, they're both 3-bedroom units. They're about 12 to one's 1,200 square feet, the other one's 1,350 square feet. They're phenomenal, very modern, 9-foot ceilings. It's sharp, really, really sharp. So we'll get some of those videos and pictures out soon, I promise, and I think you're really going to love the final product, and something that will be commonplace in the city of Toronto. These repurposing projects will be the thing of the future to add more doors to help the rental stock, and I'm hoping to give you guys a first-hand view, first-hand experience of how it's done, how we could help you finance them, how we could help you with the construction financing, even with the builders, because the builders we have understand how to put them together, deal with tight quarters, because you're dealing with tight laneway spaces. These lots are 20, 25 feet wide, so very difficult to access. It's not your traditional subdivision builder that's used to this type of stuff. So you got to get a crew that understands that market and knows how to work efficiently and diligently. So we'll continue to show you that progress, and I'll make sure we have that film and video soon. We got a question here. Kazette 067. How does reverse mortgages work? Is there any interest? Is it after 65% LTV? I heard they have 14% foreclosure rate. Okay. There isn't any foreclosure rate in the reverse mortgage world, okay? So I don't know where you get that. These are all myths, okay? So first of all, how does a reverse mortgage work? A reverse mortgage is set up on a matrix basis. You have to be over 55 years old to qualify for one. And the older you are, the more LTV the reverse mortgage lender will grant you. So it's a minimum of 25% advance and the maximum loan to value of 55%, okay? There is an interest charge that could range from mid-5s right now to 7% depending on the term. The interest is accumulating to the amount that they lent you. You're not paying it. You could voluntarily pay it, but you're not obligated to pay the interest. It accumulates, okay? And you could live in your property for as long as you want, okay? You have to make the property tax payments. So usually the only qualifier is that you have enough income to pay your property taxes. So most people have that ability to do it. We've done many reverse mortgages. They don't go into foreclosure, okay? As a matter of fact, these reverse mortgage lenders have service centers that are very empathetic to situations with families who lose loved ones, families who have to transition their elderly loved ones into retirement residences, okay? And they give you significant amount of time to transition or to sell the property, okay? They're not pushing anybody out. They do this for a living. They understand that it's a sensitive issue timing-wise. And sometimes it's a matter of one party passing away, the other one doesn't want to live there anymore, and they need some time to transition. That's okay. They'll work with you. But as far as a 14% foreclosure rate, never heard of it, okay? It's a myth, and I would debate that all day long because it's untrue. Thanks for the question. What a crowd today. Beautiful Thursday afternoon. I would think everybody's putting on their face paint for the Leaf game tonight. I will say, I was on Revealing Real Estate with Nico Pedicano, and I made the big mistake of predicting a Game 1 victory for the Leafs and a series win in 5 games. Now, I'm still okay on the 5 games because it's still technically possible, but I'm going to retract my prediction, and I should never ever predict what the Leafs are going to do in the playoffs unless I say they're just going to get knocked out. So I feel really bad. I hope things turn around because, you know, my dad's upset about it, my sister's upset about it, everybody's, you know, this Leaf craze, but it's the same old story. You know, getting booed off the ice is just unbelievable. But any other questions today? I will leave you at that. So why don't we call it a day? I want to thank everyone for tuning in. And as I always mention every week, I really encourage everybody to be kind. Try to help anybody you can out if you have the resources to do so. There's a lot of people still hurting, a lot of people dealing with a crunch on household disposable income because of increasing costs of food and borrowing and all that fun stuff. So if you have the opportunity to buy somebody lunch, buy them a coffee, take them out to dinner, do so. They'll appreciate it. You're doing yeoman's work. So on that note, have a great rest of the week. Enjoy the weather, and we'll see you next week on episode 128. Thanks again. Have a good one.